Hi, my name is Ray Freer. I'm an insurance agent located in Austin, Texas. I'm a broker, so I'm appointed with companies that best serve my customers. So I don't work for any one company. So who are we? We're licensed insurance agents appointed with more than 40 A-rated insurance companies that have been in business for more than 75 years. Our experience can help you find the best premiums and coverage for your particular needs. So we're committed to providing our customers personalized care and service, and we don't want to just sell one product and forget about you. We're here with you through hopefully building a long-term relationship where you can ask questions, and if you have problems, you contact us. You can always call us, and we're always there to support you. Whether you have a problem, question, or concern, we are with you throughout the process, before, during, and after. So health insurance, I guess, has become more and more complicated, at least in my experience. I've worked for some big companies, and I've lost my job and scratched my head on how to best find coverage that can protect myself and my family. And so it's really a necessary thing to have so you can have catastrophic medical expense coverage. So if something major happens in your life, you don't have to file bankruptcy, or maybe not, if you don't have an insurance card, you can't get the coverage you need. There are a lot of products out there, and there's not one product that can meet everybody's needs. So what we try to do is ask some questions and find out what's important in your health insurance plan, whether you need co-pays, prescription coverage. There's a few levers we can play with that will determine what your monthly premium is. Now, your health history, deductibles, office visit, co-pays if you need unlimited, or you can live with less of that. So we try to walk our clients through that. The levers that affect the premium: deductible, the coinsurance, and coinsurance gets thrown around. Most common is 80-20, but there's today 70-30 on the market, 60-40, 50-50, 100-0, and all of those play a role in what your premium will be. The coinsurance out of pocket, that amount plus the deductible is your financial liability for any major medical event that may happen in your life. A lot of plans, I think all individual plans today have a deductible on their prescription coverage, so you can play with that. If you don't have many prescriptions, you may opt for a little bit higher. Usually the generics are covered with no deductible. And then the number of office co-pays. Some people like to just pay when they go if they don't go very often, but if you're at the doctor all the time, the co-pays are important, and you may want unlimited. And the other thing is every individual policy is underwritten. So if you've had continuous coverage, they don't have a waiting period for you of 6 to 12 months to cover some of the pre-existing conditions. And with healthcare reform, some of that will change in 2014 if all holds on course. But today medical history does play a role. So there's different factors that can affect your premium, and they can change the rates. So typically the rates you'll see from any quote are going to be your preferred rates, and then there's standard rates, and then they can add some percentage on top of that. And we try to help you find the best option for your particular situation. So what do we need to quote you? The home zip code that bases the rate for the area, your age, sex, height, and weight, the conditions or prescriptions that you take regularly, and then if kind of a little bit on your major medical history, if you've had a heart attack, cancer, strokes, diabetes, bipolar, and there's a whole list of things we can talk about there, but that's important to tell your broker because he's going to need that to figure out what's best for you. We don't want to waste your time by applying somewhere that they won't accept you, so that's very important to share with your agent. We require that to ask, what is important from your health coverage. Do you want unlimited office visits? Is lower premium? Do you want a particular deductible? We can try to cater our quotes to meet those needs. So how we help you, we try to walk you through the various options. We spend time with you, if you want, to understand the coverage you're considering, the pros and cons compared to other plans. We try to guide you to finding the right deductible for you, and then we support you through the process. before and after the policy is enforced. One of the things I always, especially younger clients, want health insurance to pay for everything, but if we look at the definition of health insurance, it's there to provide coverage, and basically it's to help protect you from catastrophic loss. They did throw in some additional features that help with that, but really when we look at health insurance, the goal of that is just to cap your financial loss for a major medical event. So we try to help people understand, what people are spending on medical expenses, and the reason I like to show this slide is because, it's hard if you're coming off a group plan that maybe has a $500 deductible and you're faced with having to move to something a little bit higher. This gives you an idea what the population is doing as far as how much they're paying on medical bills. So 48% spend less than $500 a year. And as you go up, it seems like the sweet spot when I look at it, and I sell quite a few policies today that are with a $5,000 deductible, you got 88% of the population spending less than $5,000. So that might be a good starting point, but you got to go with what your comfort level says for the deductible. That's liability for you. But I've found over the years that, having a discussion about this just gets you to think about it. And then if you're considering a lower deductible, look at the premium difference between the $5,000 level and say you're considering $2,500. If it's $150 a month or $200 a month difference in premium, you may look at that and say, well, I'm paying a good portion of the deductible difference in premium. So really, you have to be smart about it when you look at it, so you're not overpaying or prepaying for something you may not use. We like to make sure you have the money in your pocket so you can use it for things that are fun to do and not just for protection. So this slide here I like to show because it kind of sums up where the medical costs are. So about 50% of the time it's for accident and 50% of the time for illness. So the reason I like to show this is sometimes supplemental coverages can help reduce your exposure to the deductible and coinsurance risk, and we'll get into that in the next slide. But I wanted you to see it's about half and half. So as we go forward, we want to help you save money and showing you some high deductible plans, really to know whether you have a $500 deductible or a $10,000 deductible. The plans offer the same doctors. You get the same doctors, the same care, the same coverage. It's just your financial liability you're buying. And the difference between the two is what the premium is. So the guy that has a $500 deductible is paying a lot more in premium than you are for that ability to have that low out-of-pocket cost. So again, just looking at the annual difference, look at 12 times whatever premium you're considering when you're considering the deductible, and just make sure it makes financial sense. The other thing I try to do is show people what deductible and coinsurance is. A lot of time I think there's not really sure if it's 20% coinsurance forever that the client pays. The answer is no. There's a limit to what your out-of-pocket exposure is, and it's going to be the deductible. So say you had a $5,000 deductible policy, you had a 80-20 plan that was with another $2,500 out-of-pocket for coinsurance. So you're looking at $7,500 out-of-pocket before you'd be covered 100%. And that's on an individual basis. So what you're really buying with that health plan is knowing that after $7,500, your insurance company is going to be there to help cover those medical expenses. Some of the games, too, you got to be careful of is in-network and out-of-network, and that does come into play and can change your financial exposure. But if you pick a major medical company, I hope most of the time you'll be within the network, so it does reduce your financial exposure there. And one other example is 100-0 coinsurance. It basically limits the portion after the deductible, so it collapses that. So right after you meet your deductible, it's paid at 100%. Some people really like that, knowing that their financial exposure is the deductible. So I guess higher deductible plans, force people to take advantage of the $5,000 and above to keep their premiums low. One approach that I found works fairly well, is added a secondary policy, a supplemental accident and a critical illness policy. I have a couple of these to choose from, but these secondary policies can help cover the deductible and coinsurance portion of your policy. So for example, if we had that $5,000 policy and we added a $5,000 accident, and if you remember the 50-50 split between accident and illness, we can take out at least half of your policy and have it protected with a $100 deductible per accident. So all of a sudden your $5,000 deductible for accidents becomes a $100 deductible. And that, for me, is a peace of mind. I have a 7-year-old daughter, and if I'm driving to the ER, I know that I'm only going to be looking at $100 out of pocket. I feel much more comfortable knowing that. And for me personally, I have a $10,000 deductible policy. And one of the other features with this this supplemental accident is it has a critical illness component that's built into the policy I'm talking about, so it matches. So if you had a $5,000 accident, you have a $5,000 critical illness plan, and that covers heart attack, cancer, stroke, and it's going to pay face value to you. So that would pay you for those deductibles if a medical event like that happened. These plans pay last, like on the accident, it pays after your major medical pays. If your major medical doesn't pay and you have an accident plan alone, it will pay for those events. And basically you'll use your major medical and then file a claim with your supplemental company and get reimbursed for that. So it works well, and it's helped my family, and it's something that enlightened me to, when I got in this business, to really share that, because I think it's a smart way to approach it. Just to give you an idea of pricing, it's a Homeland Healthcare, and it's called the AWA Gap Plan, and there's two policies that they offer, a $5,000 and a $10,000, and you can see it's relatively affordable. On the $5,000 side, it's $32 a month for an individual. On the $10,000 side, it's $53 a month. So very cost effective when you're looking at the overall cost of your major medical plan. And if you're considering or being forced financially to move it up, this is a good way to make you feel more comfortable. There is a one-time $49 application fee or enrollment fee with it. I always like to highlight that. It's not a negative thing, but it's something that you should know about if you're considering it. This information is on my website underneath the supplemental accident tab. Some of the other benefits that are included with the plan, which I really like, is a consult-a-doc feature that's included with it. You basically create an online profile, and then all of a sudden, if you need a doctor consults, even if it's late at night, they answer the phone 24 hours a day. They can talk to you about your specific situation, and if they agree with your situation, they can prescribe over the phone and call your prescription into the pharmacy. So I've had some clients really, really like that, because it saved them a trip to the doctor's office, and they were able to get relief that night without having to go to an ER or anything like that. So I think that is a fantastic benefit to this AWA Gap plan. So just to show how it works, the top line is kind of your health insurance, where you have the deductible, what the insurance company pays, and the co-insurance is your responsibility. So if you had a appendicitis or something like that, you'd be looking at the deductible plus the co-insurance out-of-pocket amount, and then the insurance company would pick up the rest. With the accident plan, you can see it's going to reimburse you. You know, if you had one that matched your deductible and co-insurance, so you had $10,000 or $5,000 deductible and $5,000 co-insurance out of pocket, and you had a $10,000 accident plan, this would pay up to $10,000 for a particular accident and a $100 deductible per accident, and that's a great way to kind of reimburse you for that financial exposure. On the critical illness side, same type of thing. Once you're diagnosed with cancer, or you've had a heart attack, or one of the major critical illnesses that are covered, they're going to cut you a check for the full amount or a portion amount. You have to look at the policy to see how that works, but it will reimburse you based on the diagnosis. Just the thing to note, you're still exposed for other illnesses that aren't considered critical illness or accident. So if you needed appendicitis, kidney stones, your deductible and coinsurance would still come into play. But I think it drastically reduces your exposure with that. So contact us today for a free quote and advice. We'll offer, customized advice for your specific situation, and that's what we want to do. We want to reach out and help people that are struggling figuring out who they should go with, and there's so many choices. We can help narrow that down to just a few and help you get the best coverage for your particular situation. We only sell products we believe in and that I would put myself and my family on, and that are licensed by the state of Texas. So we want to make sure, and we do our background on those products to make sure they're supported by the Texas Department of Insurance. We'll be with you throughout the process. Call or email us today. You can visit our website, rfimasters.com, or give me a call, Ray Freer, at 512-807-9594, or you can email me at ray@rfimasters.com. Thank you for your time and have a great day.